Thursday, August 10th, 2017, in our regularly scheduled webinar. So I want to welcome each and every one of you to the webinar today. Now, today I want to do the usual. I want to go over the longer term view of the markets, starting with the monthly charts, and then we'll scope down to the intraday charts. And then I have one kind of post-earnings setup that I want everybody to take a look at, which I think you'll find pretty interesting. Okay, first, we start out with the S&P. Here we are. This is as of yesterday, mind you, before today's little pullback. But the upper band is now 2401.30. We're still 73 points above that upper band. So again, that's a very key, significant level, as we know. For the Dow, the upper band is 20,855. And yesterday we closed at 22,048. So again, we're well above the upper band. The composite is 59.64. We closed yesterday at 63.52. So again, 350, roughly 400 points above the upper band. Now here's crude, okay? Again, the key band we're looking at on crude oil is the mid band, which now reads 55.35, okay? And last month, as you can see, we had really a bullish, I think it was actually a 2-close reversal. It might have been a 3-close reversal. So right now, you know, oil is trying to reverse. But again, we do have resistance right here at the mid band. And then here's copper. Here's the old Dr. Copper. You know, the key thing about copper was, you know, we held support at the mid band. And then here's gold. Okay, gold, you know, it's been in this really tight range for the past couple of years. And I do believe that when it breaks out or breaks down, it's going to be a pretty big move. Okay, so if it breaks out, we know we have an objective up to the upper band, which is 2025. We also have a setup where gold had traded above the upper band. So there's nothing to say, though, that it can't break down first and then head back up. So that's the pattern we're looking for now. But you can see, look, we've had 1, 2, 3, 4, 5, 6, 7, 8 months of really tight range trading. Let me go back to that. So at some point, we know this thing is going to do one of two things. It's going to break out or it's going to break down. All right, let's scope down to the intraday charts. Okay. Hey, Andrew, I see you got on. How you doing? Oh, cool. So you already sold the house then? Awesome. Okay, let's scope down to the intraday charts. Here's the S&P, all right? Now, you know we had the objective up to 2,500, and it stalled essentially at the downside confirming line, that 20, oh, this should actually be 2484.38. So I have a little typo in there. But you can see, by the way, you know, it bounced off it the first time back here in July, and then just recently we sold off against it again. We actually got above it. We got within 10 points of the objective, and then we failed. So the question now is, where should we stop out at or stall out on this pullback? The upside confirming line is 2453. I don't know if we've taken that out today. I think we got just under it, and I think the S&P is trying to hold that line. But here's the 30-minute chart. Now you can see the 30-minute had just crossed into a downtrend. So we are starting to get some bearish intraday momentum here moving into the market. And I think it's kind of interesting because you look at this chart, by the way, and it's still strongly bullish on the 60-minute chart. Now, of course, that's going to start to flatten out today. just turned bearish on the 30. We look at the smaller time frame, and I thought this was really interesting because here's the 3-minute chart, and just these patterns just repeat over and over again. On the 8th, 2 days ago, the S&P had gotten above the upper band on the 3. And then yesterday it gapped down below the lower band, bottomed out, and pretty much rallied the rest of the day. And we didn't close down off that much yesterday, but essentially it came back, filled the gap, and stopped right at the mid-band on the 3. So this thing basically did exactly what we would expect it to do in a bearish environment as well. And then when we scoped down to the VIX, I thought this was quite fascinating yesterday because yesterday's peak came at 1254, okay, which was 4 cents above the key line. And you can see late in the day, it just sold right off. But here's the thing of note. I mean, on the 30, it was well above the upper band. Okay, so we know that we would expect a retest of that upper band. I believe today we got back above it. I think it went to the next line, and I'll show that in a second. But at the very least, we know that the VIX should retest that upper band, which kind of happened today, or should be happening today. Now we look at the Qs, okay? 143.75 has been the key line that the Qs has been trading above and below. You can see how it kind of snaked above and below that 143.75 for probably the last 2 weeks. Came up the other day, got just above the 145.31, and that's where we failed at. So now we know 142.18 is the downside level. So we have 2 closes under that. It'll probably drop to 137.5. And we look at the GDX. Here are all the levels on the GDX, 2266. The GDX has gotten really tight, by the way. These levels are really close together now. That's why I don't have any confirming lines. But you can see 2266. The next level up is 2344. More importantly, the 60 had crossed into an uptrend towards the end of July. So we do have some bullish momentum going in the GDX. However, when we look at the daily is bearish. Okay, and you can see how the moving averages are still sloping down. So in my mind, this is still a counter trend rally. Okay, the question is, where are we going to stall out? And quite honestly, I think all of this is being fueled, of course, by the fact that we have all these comments coming out of South Korea and Washington. So naturally, the TLT and gold will be the benefactor of this kind of rhetoric, if you will. Okay, and then here's the TLT. Okay, same thing, 121.88 on the downside. We busted up, came up, took out 125. Next level up is 126.56. We'll look at a daily chart later because I thought the TLT was interesting because it is actually, unlike the GLD, it is actually getting very close to moving into an uptrend. Now, here's the XLE. Okay, now, interesting about the XLE is I keep saying 62.5 is probably ultimately the objective. And it seems like every time we get low, bounce, we recuperate the 65, 63 level. And even yesterday, we were kind of clinging to that 64.85 line, and it held above it. But more importantly here, it is in the downtrend. The daily is in a downtrend for the XLE. Okay, and what's happening here is that the averages are actually spreading apart. All right, now, the point here right now is that I think we are at the point where we're oversold. And I think especially if we get to 62.5, I think that would really be a good area to look for oil, at least a bounce in oil. Here's the 60-minute chart. So you can see the 60 is still in an uptrend. Okay, so there's the 65.63 line, 62.5 on the downside. We've got 68.75 on the upside. So we'll look at all these markets live after I finish the PowerPoint. But this is the particular setup that I wanted to show. Okay, it's a post-earnings trade. And the setup was really 2 days ago on Valiant. Okay, and here's the basic setup. It had a bullish gap up. You can see the earnings gap the other day. Bullish earnings gap off earnings with negative Chaikin money flow, okay? And it's funny because I looked at this in the morning. Yeah, this is great. I looked at this in the morning. I said, you know, I took one look at it. I said, this thing should go down, okay? Now, here's the interesting thing. We look at the 10. The 10 was also in a downtrend. The 10 also had negative money flow, right? So naturally, you're looking at this and you're saying, well, you know what? This is probably going to give back all these gains. Now we scope down with 3 minute, and here's where it gets really interesting, okay? The 3, the price had popped up above the upper band, okay? And the question is, you know, when would you enter this trade, all right? And what's the most logical place to enter? Well, I guess there are really 2 places to enter. The first one would be the aggressive position, which would be, let me get a pen here, which would be up in here. Now you say, why in there? Well, because to me, this was a double top. Okay, you can see that this high here didn't take out the 1697. And there were a couple of reasons why this kind of made sense. First is we already had a close on the low here of the first gap bar. So right there it tells us most likely this thing's going to head back down. So the aggressive entry is up here, okay, which is, you know, somewhere in the consolidation phase here. The next entry would be when the MACD turned bearish, which is kind of interesting because it turned bearish probably right in here, which wasn't too far off, you know, the aggressive entry. And then the next entry would be, okay, we've got the break here. And then, of course, now we've got the upper band pattern, okay? So this seems to me to be, again, one of these classic setups, all right? It came back, hit the upper band, and it farted around for about an hour. And then finally, it broke through. All right, and then it kind of consolidated up here. So up here, if you entered up here, you erase all this stuff here. If you entered up in here, you know, you've got the benefit of a stop right there at the upper band. That's what kind of, to me, makes these bands really helpful because, you know, for example, if the stock, okay, say you enter short here, in this area, you know, your stop is right here at the upper band. Say this thing just turned around and all of a sudden closed above the upper band here. Well, you know what? It's time to go. And I would just close, and at that point, you probably don't lose that much, okay? But then what happened, okay? Well, as predicted, it continued to drift down the balance of the day. Down here, you can see a position where you could add to it when the minus D1 crossed above the plus D1. So right there, momentum turned bearish. But what I find kind of interesting about this setup is this, right over here. The 1650 put, which to me was basically the at the money put, went from 30 cents to $1 in a day. The 16, which was out of the money, went from 14 cents to 90. Now, what's kind of interesting about this strike, by the way, is simply this. If you look at this, the mid-band was 1581. Okay. So basically, that 16 put was the strike at the mid-band. So again, if you traded this using that half and half strategy, you could have maybe bought half of the 16 halves, half of the 1650s. When it hit the mid-band right here, sell those 1650s, right? Which at that point, let me see. Let's see, when that hit that, it was roughly 16. So they were probably 50 cents, maybe, probably more like, 70 at that point. So you could cover out and then hold the 16 puts to see if it broke through, which it did. Ended up going about almost $1 underneath the mid-band. But yes, you're right. At 10.15, these might have been cheaper, Andrew. Yeah, you're probably right. But here's the interesting thing about this setup, and we'll look at a few more like this. But what I'm noticing is your entry comes usually around 11 o'clock, and that's when you can kind of get in these trades. So you don't necessarily have to jump the gun here and get in early when it's really not moving. But the other important thing about this setup is that this was a Tuesday. So, this is a Tuesday using a weekly option that expires Friday on a low price stock. Could you imagine if this were a Thursday or a Friday? That $16 put might have been a nickel. Now, here's the 30-minute chart. And again, this is the day of earnings here. Here's the earnings gap. And again, here we've got negative money flow on the 30. We have a downtrend. And look what a damn thing stalled. Right at the mid-band, just about virtually right at the mid-band on the 30. So that's why I say if you went it early, too, when I say early, above the upper band on the 3, you could have been cognizant of the fact that 1676, roughly thereabouts, was the mid-band on the 30. So you could kind of use that as the protection. But I think here was the interesting thing. This is day 2, okay? So obviously, if you were just trading this on a Friday, you don't have the benefit of this. But on day 2, we had the gap open to the downside yesterday, and it just continued to drift down all day. And you can see, ended up down $1.50. So look at these calls. The 14-cent 16 put went from 14 cents to $1.95. The at the money put went from 30 to 250 in 2 days. And again, that bearish gap open, kind of told you, well, you know what? Let's hang in this trade and hold the short position for a while. But this is just a phenomenal setup. And again, this pattern we know repeats over and over again. I mean, it's just really a strong setup. Ow, my knee. Sorry. Okay, that's what I wanted to cover today. As a matter of fact, let me do this, and then we'll take a look at some live charts. And by the way, what I'm looking for in these is it's basically a 2-day trade. Because if we look today, let's take a look at VRX. Okay. You know, it's basically trying to find support down here now. You know, and look, it's up like 9 cents today. So, I mean, you're out of this thing in 2 days and you're gone. But let me do this, guys. Let me get put the handouts in there. It's just remarkable to me how many times this this setup occurs, to the point where looking at these deals specifically for that setup makes a lot of sense. For example, here was Cena, okay, had positive money flow on the daily, and it had a down gap off earnings. Now, again, they reported yesterday. And look at it, it ran up like $8 off that setup. Let me see. Okay. It was underneath the lower band on the 3 when it reversed here. So this is kind of the exact pattern in reverse. Positive money flow, bearish down gap, drifted lower, and then recuperated. Now, what's interesting, if we look over here to the left, here's where it was underneath the lower band. Okay, the ADX line had peaked, started heading down. We had the bullish crossover here, the PPO. The entry was right around 11. Again, so it ran from roughly 94 to 100. And target 1, to me, was mid-band, hit the mid-band, and ultimately took out the mid-band and headed higher. Now, this obviously isn't a day 2 pattern, you know, because it gapped down. This is why it does kind of make sense to maybe even look at these things as a day trade. But depending on the price of the weekly options, you know, you might have been able to hedge off your profit here. And again, with the market being bearish, going long, to me, you have to be kind of nimble anyway, because obviously we're getting a tremendous sell-off in the overall market. Let's see if it is starting to firm up here at all. But Cena was an example of one in reverse, bullish with the down gap. All right, not at all. So we're down 26, down to 24.48 already. Let's go back to the PowerPoint. Take a quick look here. Okay, 24.46. So we broke under the 24.53. To me, the objective should be down to 24.37 at this point. And with the VIX, all right, we're up to 15.36. So we know with the VIX, where is it? Okay, I'm looking at that 1563 right now as being resistance. Now, here's the thing. In my opinion, the VIX should stall at 1563 and not break through that level. If it breaks through that level, then to me, there's a serious chance that this pullback could be a little bit deeper than everybody thinks it will be. But at this point, I don't see the VIX breaking through that. And again, you know, I could be wrong, but I don't see that happening. Because the next level up is going to be like 1875, which means that the VIX is broken and actually gone through a 3-level move really off the bottom, which it really should not extend more than 1563. So we'll see if we start getting some buying coming back into the market. But nonetheless, we have a couple of situations. Let's see if we're we are in relationship to the 30. Okay, now the 30 has gotten underneath the lower band. All right, so, at this point, we are short-term oversold. But there were a couple other earnings moves that I thought were pretty interesting. We had Perrigo today. And look at this. This gapped up, okay, up right now, 1074 was up a little bit more. But here's the setup that I'm starting to really monitor, which is this. One of the things I'm noticing is this. If that ADX line has been really low, and when I say low, under 20, to me, it's indicative of a fairly big move off of earnings. I can show a couple other examples here this week where that happened. But at that point, maybe looking at some straddles might make sense. Because I look at this one, this Babcock and Wilson. Now, this Wilcox, this is down 64%. And now the ADX line's 27. But this thing had been well under 20 leading up to earnings. And the other one that just reported was NetEase, which had the same setup. It's still under 20, okay? Now, what's interesting about NetEase, I priced out the options. The at-the-money 315 put and call were about 19 bucks. So you got to figure right now, it was about $30 right now. So you walk away just on a straddle position making money. And the question in my mind is, well, do we have something that can tell us a directional bias? Well, again, my answer to that is not really. I still cannot find that. But what I am beginning to think is that it might make sense where the ADX line has been really low to expect a pretty big move off the earnings. And there's been a number, by the way, there's been a number this week, a number of these deals where that's happened. So I'm finding it pretty interesting because, again, I'm still looking for that grail. But Chicago Bridge was another one. This was a deal. Look at it. It's still under 820. This is down 33% off earnings. And what's interesting about it is the 1650 and 16 straddle, which is the 1650 call, the 16 put was about $2. And that's got to be worth $5 today. So that's a setup that I want to really continue to monitor. Because it does seem to have some merit. Oh, and by the way, what was the other one this week? The big, stupendous move was Priceline. Percentage-wise, it wasn't that really big, quite frankly. But look at the move, down another 42 today. This thing was down, how much? $142 off their earnings. And I believe, by the way, that actually a straddle would have been profitable on this deal. Now the question is, see, I looked at it on a daily and I didn't see this thing really low. That would have been my preference. But, as you know, these options were incredibly expensive. I think the at-the-money put was like $4,600. But I guarantee you somebody had those. Crazy. Just a crazy move, dollar-wise. But that's the setup I'm starting to look at going into earnings to see if that really is holding true. Because I've noticed a number of deals this week where that ADX line has been under 20 and the darn thing has made a big move. And again, if you straddle it, you really don't care what direction it's going. What you really care about is that it makes a big enough move or move bigger than the cost of your straddle or your strangle. And then, of course, you can trade post earnings like VRX. I don't believe VRX was under 20. Let me see. Nah, it wasn't. So, I mean, I would have been, I wouldn't have been inclined to straddle it. But, when you saw the thing gap up with the negative money flow, then you could have traded at post earnings. And that was a heck of a trade for 2 days. And look how it's kind of firming up today. It's really not doing anything. I thought there was some opportunity the other day because this PAA reported. Let's take a look at PAA. All right, they reported the other day. Well, this is kind of interesting because look, if we look down here, before earnings, it was under 20. Oh, that's interesting. And again, I'm just doing this. I'm not trying to set this up. Let me take a look at this. Okay. So this was under 20. It closed at 25 before earnings. So let's take a look. The 25 put, oh, okay, I can get this. All right, 25 put before, holy crud, was only 42 cents. Holy jeez. So you could have straddled this thing, let's call it $1, okay? So you're in both sides for a stinking $1. Now, the day of earnings, it closed at 20. So this thing would have been worth $5. There's your $5 up there. Well, they're showing $4.39, but this would have been worth $5. So this thing went up. This was a 400% return overnight, just off that setup. And again, I didn't really even look at PAA. I looked at it the other day because I saw it gap down off earnings, but I didn't really look at the ADX level. But look at this. This thing was well under 20 for a while going into earnings. And the reason I looked at it is because a lot of these other pipeline companies sold off in harmony, like ETE. Like this was down, and look what happened with ETE yesterday. It just screamed up. So this made a tremendous move, ETP as well, off the harmony trade with the earnings of PAA. The only one that hasn't really is this KMI. And I've been looking at KMI. I actually looked at it to possibly recommend a covered call trade on it yesterday. But the premiums were just they were negligible. So I didn't even recommend that. Just passed on it. And by the way, if we go back to KMI, okay, the high of that gap is 1957. The low the other day was 1959. So I would watch this to see if it breaks through the upper end of that bullish gap. And if it holds support there, to me, that's a pretty good buy. And odds are it'll probably head up. Anyway, that's what I wanted to cover today. So, you know what? I'm starting to really look at that to see if this pattern holds true, because I got to tell you, I would love to just sit here and do these, no-brainer trades putting a call before earnings. And if it works, you make some pretty good money. And I'm hoping that does hold true, because that to me would be the holy grail. Now, the other thing is this: you could also do an uneven straddle. So say you're biased long, as an example. I mean, you could put on, 10 calls and 5 puts, or vice versa. That's another way to do it. For example, let's take a look at this stock. It was Novo. They reported the other day. I don't particularly like this stock, but it bears an example. You can see how low the ADX was. Now you go to the 30-minute chart. Come on, there it is. And you can see that the 30 had started bottoming. Okay, started heading down. And then it gapped up off the earnings. So, I mean, in a case like this where it's, trading around the lower band, maybe you're biased to the upside. And, in this case, you could do an uneven straddle. Quite frankly, on Priceline, had you done that, you still would have made money, This was closed at 20.49, and look where it is now. Unbelievable move. So, say you had 10, well, again, you wouldn't have it. It would have been too costly and too cost prohibitive. But say you had, 6 puts, you could have 3 calls, you still would have walked away making some really good money. And by the way, even on Priceline, it was funny because PCLN, the other day, it was below the lower band on the 3. And then sure enough, right around 11 o'clock, let me take this off so you can see it. Right around 11, right in here, there's your entry. It ran from like 1878 up to 1902. So this was like a $20 some odd swing, $30 swing in basically an hour. And then of course it peaked out and sold off this morning here. Gave that back. So you had the up move. You wait. Here's it got overbought. Let's see. But again, to me, not all that appealing because this was a Tuesday, actually a Wednesday and a Thursday. Not too exciting. If this were a Friday, this could have been pretty interesting because look at the move today. High in the swing high was 1907, and the low was 1856, call it 1860. So you're still talking a $40 some odd swing here. On a Friday, that those puts $20 out of the money might have been pretty reasonable. Interesting. All right, so that's what I wanted to cover today, but that's the pattern I'm starting to look at pre-earnings. Any questions? All right, well, listen, guys, I'm going to close down for today, and I want to thank you all for being here. We'll see if we start to firm up here on the S&P. Dow's got to be down fairly substantially. No, we're down 157. I got to be honest with you. To me, this isn't really that huge of a sell-off based on what's happening here internationally. We've got, all this crazy rhetoric going on about bombing people. It's crazy. But yeah, welcome back, by the way, Andrew. I'm glad you closed, and hopefully you'll get settled soon. All right. Thank you, everybody. Have a great day and a great rest of the week. Thank you.